Have you missed it? Like, do you guys think, I should have got in on Bitcoin?
I don't spend long
5 years
thinking
ago.
about it.
Bitcoin.
Bitcoin is something that certainly a lot of people think, is going to rise as an alternative currency.
The Australian Bitcoin Podcast, presented by Heartblock.
It's not a currency, it's not money. I don't understand it.
G'day. How's it going? And welcome to the Australian Bitcoin Podcast, episode 108, where we bring you the best of the Bitcoin and macro, or at least for today, signal from an Australian perspective. Once again, I'm joined by my esteemedly based colleague, Mike, and joining us to help monitor the situation and try to help us all understand precisely what has happened, no pressure, in Q1 2026 from a macro POV, the Strawman himself, Mr. Andrew Page. Gentlemen, hello. Andrew, thank you very much for joining us.
Yeah, hey boys. Always a pleasure, man. I mean, you don't have to ask me twice to come on a Bitcoin podcast. Right? I'll be there. Glad to chat.
Excellent. We're recording on the 19th of March, 2026. Block height is around 940. Well, I can just round. It's 941,000. I had it before. 941,243. We are humming at the moment at 1,056.3 exahash. So we're doing, what's that, 1.6 trillion, over 1.6 sextillion calculations per second. The Bitcoin network, all of those ASICs are humming along and securing the network, make everything robust, and securing those transactions and mining those blocks. Now the price, well, we had a little bit of a 8% pump over the last few days, which didn't go astray. And I got to say, given everything that's going on, and particularly what we're about to unpack, the price is holding up pretty good. We're sitting at 71,000 US cuck bucks and just over 100,000 Aussie dollary dues. So, it's a happening thing. We're up on the last time we ripped, which is always welcome. And I guess we've got a bit to unpack, given the fact that we're going to cover all that happened in Q1. We're going to try and not let dominate what's happened over the last few weeks in Q1 dominate, but just to give everyone a bit of an overview. We brought in Andrew, who has told us off air that he's not a macro expert, but we tend to disagree. Scott wasn't available, so we and neither was Luke Groman. So
you got me.
Yeah. So we got Mr. Strawman, which we are absolutely stoked. You know why? Because he's an actual Bitcoiner, and that's all you need, really. And I got one question to ask just to kick this all off. So Mike and I were sort of going backwards and forwards about how we wanted to unpack this, but I need to know, given that you're a Bitcoiner and therefore ought to know what the directionally correct solution is, how do you maintain your care factor for macro?
I don't have to maintain it because I find it fascinating. It's just interesting. I think most of your listeners would probably be put in the same bucket. It's like the world is a dynamic, complex, fast evolving place. And, I think as a species, we need narratives to try and make sense of it. Whether or not they're always accurate, I don't know. But I find it endlessly fascinating. And at the same time, I hold a couple of thoughts in my head, which are kind of contradictory, as like, it is super interesting and it is super important. But I'm also of the view that it's of not a great amount of value for short-term traders. It's probably a controversial statement. I mean, it is if you can get it right, but there's a lot of in that. There's a lot of heavy lifting. And I tend to view it a bit like, I distinguish it in the same way I would distinguish the concept of climate with weather. They're kind of related. Climate's kind of important, right? But, just because it's rainy today or cold today doesn't really tell me about the broader environment. And the weatherman will have a forecast as to what the weather's going to be like in 3 days' time. And it's kind of like, it's interesting and it's relevant, but it's not as important as the bigger picture, the bigger story. I'm not trying to make any statement there on climate change either, by the way. I just mean outside of any of that kind of baggage. Yeah, no, I mean, I know the audience, right? So I'm not going to tiptoe into that. But it's the same point. I mean, regardless of that, they are two related but very different things. And I think it probably helps people to sort of, well, helps me anyway, to sort of separate them like that.
Nice. This makes sense. Yeah, I mean, a lot of people like to focus on the froth and the foam that's on top of the wave, but it's the energy underneath. That you really need to be mindful of. Mike, I'm just going to shout out, awesome hat, by the way. How was the Beechworth Bush Bash?
It was great. It's awesome. Yeah, love it. Every time you go, you're reminded just how good it is to just chat with Bitcoiners and just kind of let loose a little bit. You know, you don't have to be guarded in what you say or say the wrong things. Like you can say the most obnoxious things and people won't bat an eye when you're at a Bush Bash. Which I appreciate. But yeah, it was awesome. If anyone hasn't been to one, highly recommended. What's the website? Bitcoinbushbash.io. Bitcoinbushbash. Yep. .info. Bitcoinbushbash.info. So for anyone that doesn't know, it's a conference that happens every now and then in a random country town around Australia. So it happens in Beechworth, Palm Cove, Byron Bay, somewhere in Western Australia now.
Bustleton. Yeah.
Bustleton. Check it out. And it's awesome. People get up. It's free. You can just rock up. No tickets required. Treat it like a holiday. And you go to the pub after some talks and just shoot the shit. Talk about Bitcoin. Talk about conspiracy theories. Talk about whatever you want. And it's awesome. It's awesome.
This is the way. There's a really good house price chart on there as well. If you go to that website, it's up in the menu on the top, and it gives you a bit of an indication of just how cheap housing is getting actually when you denominate it in a proper money like Bitcoin. Right, so Q1, I don't even know where to begin. I mean, we could probably just run straight at it and talk about the current. Is it a war? Is it an operation? Have we got boots on the ground? Who knows? I don't know. This isn't really a macro podcast. I'm completely regarded when it comes to this sort of stuff. I was sort of doing a little bit of research beforehand and, trying to get my head around it. But to be quite honest with you, it just seems to come back to, actually $39 trillion worth of debt now. The US has clicked over. That's official.
It was only yesterday we were at 38 trillion, it feels like. Well,
that's right. So it's currently 39 trillion. We've actually put on a whole billion since I looked at that early this morning. So that's cool. 39 trillion, 7 billion, 51 million, 100 and 200 and 300 and 400. It keeps going up. So anyway,
we're going on after all.
Well, yeah, we're in a lot of debt, and I guess you got to kind of pay for that, right? So, what do you know about the current macro environment, Andrew?
Was it John Pierpont Morgan, the JP Morgan, not the man, not the business, big industrialist from 100 years ago? He was often asked, what's going on? What do you think will happen? And his answer was, I just love it. And I use it all the time. It was, it will fluctuate. And it was a really annoying answer, but it's a pretty good one. And if I could try and force that way of thinking to answer your question, I would just say that there's a lot of uncertainty. And it's a really unsatisfying answer, right? But it's also one of those things that whenever you actually, people say it with a straight face, right? It's like, what's going on in the market, in the global economy? Well, there's a lot of uncertainty at the moment, as if there is ever a period of high certainty, right? And in fact, if there is ever a period where people perceive there to be a great deal of certainty, it's probably the top, right? Like that's usually the most precarious place to be. So it's very unsatisfying because it is always thus, it is always true. Maybe in terms of degree, yeah, there's a lot more uncertainty at the moment. But the thing you always got to remember with macro is that there are narratives and events that sort of come along which just weren't even on the radar that long ago, right? And it's sort of like you ask a particular macro view and it's like, oh, it's all about this. And we curve fit the data, the recent data, into a narrative, and it all seems to make a great deal of sense. And from that, you can speculate, and that's what the game is, right? So, well, what does that mean? Where are we going? And there's all these other narratives. But when you observe this stuff for long enough, one of the things that always stood out to me was just like the really big things that happen that have a decent consequence and a lasting sort of impact was almost always the thing that no one was talking about, right? It wasn't like, oh, everyone's watching this is the thing to watch. And it's like, oh no, it was totally something else. 100%, not something else that we didn't think was that important, something else that no one was talking about at all, you know?
Mm-hmm. I can think back to like 2019 in around September when the overnight cash rate just completely spiked all of a sudden. Mm-hmm. And something broke. And at that point, I must admit, I was super into macro and was following it quite closely. And I remember saying, I think it was to like a family member, I was like, oh, something's happened in the financial plumbing overnight and everything's just busted. And this was in September 2019.
Interesting.
And what happened in 2020? Well, I don't know if they correlate. I don't know, but you know what I'm saying?
Well, I tell you, I guarantee no one at that point was saying, oh, it's because there's a global pandemic around the corner. Not only that, but this is how everyone's going to react to it. Like it wasn't on the radar. I mean, you can make the same comment in 2007. There was plenty of people said, geez, it's a bit toppy. But no one knew the way it was going to unfold, what the catalyst was, what was going to be the match that sort of set everything off. Same with the .com, same with the sovereign crisis in Europe. I mean, like any major macro thing is not every time, but often. And what that says to me is that it doesn't stop you talking about it, because as I say, it's fascinating. I love to talk about it, but it does require a great deal of humility. And whenever you're super certain about something in macro, you probably should check yourself, because the history is littered, with the graves of very, very smart, very experienced, well-informed people that made calls that were just in retrospect were laughable, and at the time were perfectly sensible. In fact, often mainstream, and again, I'm not trying to say anything other than it makes me very cautious to sort of say, well, here's the narrative and this is definitely what's going to happen from there. It's like, ooh, I'd be a little gun shy to ever kind of do that, because you're very, very statistically very likely to have mud on your face after doing so. But look, to answer your question, it's very much about oil. It's very much about conflict, right, at this point in time. But the hard thing, I mean, that's Captain Obvious, right? But how does that resolve? I mean, it's Trump we're talking about. I mean, I could turn around tomorrow and go, yep, we're out, we're done. Or it's like, no, we're landing troops. We're like either one of those. I don't think everyone's probably got an opinion on what they think was going to happen, but anywhere in those spectrum, we could see events unfold in that way. And it might not have been your base case, but I think very few people would be, Mike, whoa, what? It's like, this is the world that we live in. You just lurch from one, oh my gosh, to another, and everything is in play and on the table, right? There was even nukes being talked about not that long ago, right? Tactical nukes.
Yes.
And oh my gosh, hopefully not.
Tactical nukes.
It makes it sound a bit more sophisticated, right?
What are they called? Precision. Yeah, it's keyhole surgery.
Yeah. With a nuke. Yeah.
With a
and things escalate pretty quick from that. I mean, I'm just thinking about. I mean, there's a lot of history we could get into, and history is very informative. But it's like how World War I kicked off with a random assassination somewhere in Europe. I mean, not that there's a long history going back with what's going on in the Middle East, but those events of October 7 really kicked everything along to where everything that sort of happened since then has been following from that. And that itself followed from a very long chain of events. I don't know what I'm saying. It's complicated, I guess, is what I'm saying. You can go any direction.
I think the thing that fascinates me is that, as you pointed out, it's not the obvious thing that is the catalyst, So if the markets were to quote unquote shit the bed tomorrow, we couldn't turn around and say it was wholly and solely this recent Iran war or whatever you want to call it. I don't know if it's a war or not.
Conflict.
conflict. Yeah, disagreement.
Geopolitical strife.
Special military operation.
Special ops. That's the one.
Yeah. So
But not a war. It's not a war.
Not a war. This is INSOC.
Let's be clear. Yeah.
But Japan, like, it always kind of leads down the same road of, you know, expanding the money supply, trying to cover over the cracks. The cracks get wider, the cracks get bigger.
Yeah.
And I was just looking up the 2008 financial crisis bailouts, and you had things like the Troubled Asset Relief Program, or TARP.
TARP, yep.
The fair value subsidy. And we're looking at roughly, what was it? Federal Reserve support, crisis to peak, was $2.3 to $2.8 trillion of total commitments exposure. So, you know, at that point it was Bernie, I can't remember the Fed chairman at the point. Was it Greenspan? I don't know. But they spent
Bernanke, wasn't it?
Bernanke, thank you. Yeah. Around $498 billion came out of the fair value subsidy cost estimates, and then TARP threw some $31 billion at the problem. And this was all to do with poor lending practices, effectively. I think that might have been the pin. It's been a while since I've watched The Big Short. But fast forward to 2020, and you're looking at sort of around $6 trillion to cover up the cracks and fix the plumbing. You know, and a lot of people don't grok these kind of large numbers, you know, $500 million, $1 billion, 500 billion, 6 trillion. Like, what does that all mean? If you think of orders of magnitude, so if you were to spend $1 million and you spent $1 a second, how long does it take for you to run out of that $1 million?
3-4 years.
It's 12 days.
Oh, where was it? Oh,
so
per
$1
minute.
a second.
A second. Okay.
Per second. This is the thing that trips people up. This is per second. So you're spending $1 per second. You got $1 million. You'll run out in roughly 12 days. You got $1 billion. You spend $1 a second. You're going to run out in 30 odd years. I think it's 32 years, maybe 33, closer to.
Okay.
1 trillion. If you spend $1 a second and you've got $1 trillion to spend, I got to look this up. It's somewhere in the order of like 20
back before the
30.
Pyramids were built or something. You know?
Yeah. I should have looked this up before I it's like 30,000 years. It might even be more than that. Let me ask.
Gosh, before agriculture was invented.
Basically before we walked out of the swamps. I'm pretty sure.
Yeah.
Are you just trying to get at the levels of abstraction that we're talking about here in terms of these debt levels and stuff? It just doesn't make any discernible sense.
Yeah.
And the only conclusion you can make is that we're kind of just in this fake world, this fake reality, in terms of the economic system we've built and these levels of debt that we're playing with. And if it doesn't come crumbling down, will it ever? I kind of phrase that strangely, but you would think it would have broken down already at this point. When we get into this, what did you say before? 32 trillion in US debt. Australia's just crossed over 1 trillion in total national debt. These numbers are insane.
Yep.
And yet it still is
39 trillion.
along.
I think that's such a great point, Mike. Just to double down on that, I think that is something that we as Bitcoiners need to be particularly reminded of, right? Like, I don't think we need to sort of convince anyone listening to this as to sort of the merits and long-term trajectory. And once the penny drops for you on this thing, I think we're all the same, where it's like, oh, it's inevitable. Like, it's not a question of if, but when. And I very much believe that, and my capital is allocated accordingly. But I do try to remind myself very often that, you know, the old saying is the market can remain irrational far longer than you can remain solvent. You know, Michael, you mentioned The Big Short. Michael Burry called it. He was the one that, you know, got Christian Bale to play him, and, you know, pretty cool when Batman's playing you, right? Like and he's sort of lauded as this sort of like incredible savant that sort of saw it all. It's like, well, you actually go back in that period of time, there were plenty of people calling the insanity here. He wasn't the only one to see it, but a lot of people saw it 4 or 5 years before it happened. It was just like, and ostensibly wrong. It's like you were kind of right, but if you were depending on how you were sort of trying to position for that trade, you probably got wiped out in between. So it is something to bear in mind, that I think the path that we're on and the journey that we're on, be patient, because it's going to take a while. And this I'm very fond of the concept of network effects. Network effects are super potent and super powerful. And the ones that are compounding quietly away with Bitcoin are, going to get us there. But we are trying to disrupt one of the biggest network effects systems in the world has ever seen, which is the US dollar system. Is it a joke? Yes. Is it mathematically inevitable that it will fail? Yes. All of the things that people say, but then people go, oh, and then we just assume that that's like, oh, if it's not tomorrow, 5 years, and we throw out a number that we feel is a long way off. Yeah, 20 years later, I mean, I'm not saying I want this, but I'm of the view that system is going to exist in some way, shape, or form for a very long time. And not that I hope for that, but we've got to be mindful of this kind of stuff. And I think those that ultimately succeed and benefit most from this adoption curve that we are on are those that can have the patience and the fortitude to see it through, because it's going to, it's Max Payne theory. Like, only a market can make a 1000x the most painful experience you've ever had, right? And that's what we're on. It's like we all see the 1000x. Oh, I'm making up big numbers here, but you know what I mean? It's like, okay, cool, that's great. Bless your little cotton socks if you think that's next year, right? And if it does spike up next year, it's like, it ain't gonna, it's gonna be up and down, and you're just gonna mess with your head the whole way through.
The thing that I'm watching quite keenly at the moment, and maybe I'll get your thoughts on this, is obviously we've got the Iran war going on. We're now into fourth week of that now. We're seeing oil prices explode. We're seeing Bitcoin's doing relatively well compared to the last 6 months. The last sort of couple of weeks, it's woken up again and is beating out, the S&P 500, gold, silver for the past month, which is good to see. But do you think that we may be right now witnessing something that could potentially kill the petrodollar? That we've been sort of living in that world since the mid 1970s. Petrodollar system, we are now seeing a direct attack on it for the first meaningful attack on the petrodollar system since its establishment. And I don't know if it was fake news. I maybe need to verify this, but apparently one of the first ships has gone through the Strait of Hormuz in the last day or two, where the settlement was the trade was settled in yuan and not US dollars. Mm-hmm. And that to me is like a signal of the petrodollar system starting to crumble before our very eyes. And so I'm curious to see, what your thoughts on that is, and what the potential impact on Bitcoin will be. Because obviously in a world where there's no petrodollar system, there's no monolithic US dollar lording over everything, does that finally create the gap for Bitcoin to slither in and do what it's intended to do?
Yeah, but at the margins, I mean, it's growing up. It's a teenager, right? It's so young, and it's come so far. And as far as it has come as $1 trillion+ asset, it doesn't have the depth or liquidity to handle global trade associated with oil. It just doesn't. It's not there. So even if China or some big player woke up tomorrow and said, "Yeah, we're going to start settling," and that it just doesn't have the capacity to do that at this stage. So it might start to happen on the edges. I would expect it's probably more, as you pointed out, like being settled in yuan and those kinds of things. And I also think it's not something that's a point in time kind of thing. It's a gradual transition. I mean, you can look at the evolution of global reserve currencies over time. And, when the US was in the ascent and that became the sort of the more official reserve currency, I mean, the pound was still doing okay and continues to be used to this day. and yep, it's a shit coin, but it's probably one of the better shit coins that's out there. And all I'm trying to sort of say is that I think directionally, Mike, you're 100% right. Like it will trend in that direction, but I just think these things will take a long time to happen. And I think, don't forget that the people who are making these big decisions, they're less interested in freedom money than we might be. China wants to settle in yuan, right? Like, obviously, and these are powerful entities that aren't going to be driven by a broader ideological kind of, well, not perhaps the ideology that we would subscribe to. So it's going to take a long time, I think, for that to happen. And even in that space of the US dollar is going to play a very important role. Don't forget that the deal with the petrodollar system is a quid pro quo on every deal, right? And so, for the Yanks, it was like, well, can you just recycle or just make sure that you accept US dollars for your oil and then buy our bonds with it, right? But the Saudis, etc., they got military protection and hardware, and they still want that. I mean, the US is an empire in decline, but it's still the biggest gorilla in the room, right?
And that's being tested right now. That protection that's offered as part of the deal,
yes,
quid pro quo, is being tested right now. And
yep.
Who knows what the real case is, but in theory, they've got 1 week of interceptors left, and the supplies are dwindling, and Iran can just keep sending $50 drones at them endlessly, piece of cardboard with bombs strapped to them endlessly. So it's going to be tested now.
I mean, this is the thing. I think Dalio's got, I disagree with him on a lot of stuff, but I think he's directionally right with a lot of the stuff he's sort of talking about now. And he has, his whole shtick at the moment is he's looked back in history and he's sort of noticed these sort of patterns that tend to happen. And we can agree or disagree with his interpretation, but the historical fact is pretty clear with these kinds of things. And these big transitions or turnings, if you want to call it, there's different mental models to work with here. When looked at in hindsight, they feel as though that was very quick. On the ground at the time, it was like, oh, that played out over 30 years, right? Now we're all long-term investors, but Keynes said, in the long run, we're all dead. And
the classic is the Great Depression, right? Like we look back at it in history and we think it was this crash that happened, and then straight into depression world. But actually, it was this very slow lurch into this horrific trough of depressive economics.
You're looking for a hassle-free way to buy Bitcoin in Australia? Hardblock makes it easy. As Australia's longest-running Bitcoin-only exchange, their mission is to help Australians simply and easily buy Bitcoin and take it into self-custody. There are no deposit or trading fees, just a clear 2.4% spread. That covers operating costs, so you always know exactly what you're paying. Withdrawals are just $1.18 or as low as 400 sats with AutoSend. There are no hidden charges, no surprises, just a fast, reliable, and easy way to stack sats with total transparency. Get started today at hardblock.com.au. Bitcoin made easy for Aussies.
I just finished a book on that at the moment, actually. And the crash was like the first sort of thing that happened, but it was the real economy, the impacts that were there, that you were 100% right. It unfolded over many, many, many years. And I just try to stay grounded in all of this. This is like, forget Bitcoin, right? Forget macro. In how I invest in general. I figured out a long time ago, I'm just not smart enough to trade in and out and get things right. It's too much noise for me to ever figure it out. All I know is that if I'm looking at an asset, whatever asset you want, and if I view that is likely to be materially higher at some point in the not too distant future, then buy it. I mean, let's go with Bitcoin, right? If you think Bitcoin's going to be worth $1 million inside of 10 years, I'm just putting that out. People will have their own views on whatever it is. What do you do with that information? I mean, I know it. I buy it now with my ears pinned back as much as I possibly can. I don't really care what's going to happen next quarter or, what thing might happen. Like, yeah, maybe I'll look back in the future and go, gosh, if I'd just waited, I could have bought a whole bunch more cheaper or this or that. All I know is my North Star is That's where it's going, right? And I just want to be able to position myself in a way where I have the resilience and fortitude to ride that journey, because it's not going up in a straight line. And I'll probably, all of us will experience a multitude of 50% drawdowns, if not more, along that path. But you're still left with the same conclusion, right? I mean, if I just arrived in the DeLorean today, guys, I'm from the year 2035, the price of Bitcoin is $1.6 million, and whoop, and I just disappear again. Well, what do you do with that information? Are you just going to go, well, that's interesting, Andrew, but, I do wonder what Trump is going to do with this. So I might you'd be an idiot to do that kind of stuff. And I think I like Checkmatey's view on this kind of stuff. It's more about any of this kind of analysis or contemplation, which is interesting, and I'm not trying to throw shade at it at all. But the real value is not in timing. The real value is in rehearsing mentally what that looks and feels like, so that when it happens, it's like, you don't have to be happy about it, right? You just don't want to be shit scared, panicked in the headlights. What do I do? Kind of thing. It's like, am I any of us happy? Bitcoin is not where it was, back in October. Yeah, but I don't think any of us. I don't want to speak for you guys. I'm sleeping like a baby, right? But doesn't mean am I annoyed? Yes, I'm really annoyed. I would far prefer it to be much more. When Lambo now, please. You can only roll with the punches in the way that they are delivered. And sorry for the long rant, but I just think that this is where I have seen it. Again, I'm bringing my perspective here from equities, and I'm applying it to Bitcoin, but it's exactly the same story. The number of, and it's usually, this is the weird thing, it's usually the higher IQ people that are more susceptible to this. The smarter you are, quote unquote,
the mid curves. It's not even. It's the high. It's the mid. It's the people in the mid of that bell curve.
Well, you're your own worst enemy. You're overthinking all of this kind of stuff. Like, just get out of the damn way, right? Like, this is the game that you are playing, right? You are buying a piece of something that you think is going to accrue for whatever your thesis happens to be over time, and it's not going up in a straight line. And the only rational course of action with that is to just take the allocation whenever there's a positive expected value, right? And to do so in a fashion that you're bulletproof on any drawdown if it happens. If it doesn't happen, happy days. If it does, I'm never a forced seller B. Forced sellers are the people who get themselves into trouble. People who try to be too cute, I'm going to sell now and buy back. They're the ones who have the regret. I got into Bitcoin much later than I'm sure a lot of you guys and than a lot of your listeners. And, I think the first significant amount that I bought was probably 50,000 Australian, and then it went down to 20,000 something, right? Can I tell you how much I care at this point in time? Like zero. I just don't. Yes, I would have preferred, but this is great. I am up a lot, and I expect to be up a lot more in the future. Do you know who doesn't have that mindset? Do you know who doesn't sleep well at night and who can't look past a shop front window and catch their reflection without feeling immense shame and humility? Is the person who thought, it's a little bit bare. I'm going to wait until the bottom's in, because someone always rings a bell at the bottom, apparently, and then I'm going to do it. That is what is going to screw you, right? Picking bottoms gives you smelly fingers. It's not worth trying to do any of that kind of stuff. It's not trying to be too confused. Maybe if you've got an itch to scratch, take a little bit of play money and do some favor. But you do not want to be explaining to your grandkids in 20 years' time. It's like, wow, granddad, you were there when the monetary reset happened, and that you were actually earlier than 99% of people on the planet. Yeah, I was. How come we don't live in a gold mansion on top of the hill? Like, what is the answer to that question? Well, kids, granddad was an idiot, because granddad decided that he could outtime the market and do what 99.999% of people can ever do. And it's like, that stuff will haunt you until your dying days.
Well, that, or either granddad was too interested in these new FIA rules and regulations for Formula One, and it was driving him mad, and he was posting rage baiting tweets on Twitter that these Formula E cars are terrible. But I digress. There's a concept that I don't see it too often nowadays in Bitcoin Twitter or elsewhere about low time preference, and that's kind of what you were unpacking there, Andrew. Is this notion of low time preference? You DCA, you buy and you hold, and it doesn't matter when you get in or when you get out, and that's a really important trait to have, I think, with anything, even if it's Bitcoin or maybe some sort of speculative penny stock that you think might, rip 10, 15, 20x at some point. And the point is that you've just got to buy, enter the position, and just wait it out. And you're going to have a really bad time if you think that Bitcoin is a get rich quick scheme, because it's not. It's a don't get poor slowly scheme.
Yep.
And cultivating that concept of low time preference, and what that means is basically, just going about your business, buying and holding, DCAing as much as you can. And obviously, we're shilling for hard block here, but we do have the easiest DCA in the game. It's so simple to go, and we've even got a calculator that you can view on our website. Nice. If you go to hardblock.com.au. But cultivating this sense of low time preference, particularly in an environment where, I've heard it said by, I think Jack Mallers maybe pointed this out at one point, that we're basically living through a silent depression. The US dollar gives the perception of, prosperity through inflation and money printing, and we can create all these massive asset bubbles and nominal gains. They kind of hide, I guess, the real decline of purchasing power and living standards that millennials and Gen Z or Gen Z, I don't know how you say that. It's Zed. The word is Zed, by the way. It hides all of this stuff, and we're kind of lurching from one thing to another. And so if you are entering the Bitcoin market and you don't have a whole high time preference, and we are living in some sort of silent depression where things are maybe not materially, because technology hides a lot of this.
That was the point I was going to make. Yeah.
Yeah. This is the kind of the weird paradox that we live in. I mean, you may have, read Jeff Booth, but this is what makes a Bitcoiner. And those 80%, 50% drawdowns, you got to weather those storms and try and make them fun. Actually, you got to be able to
see them for what they are. They're a gift from God. I mean, they're an opportunity. Like everyone says, oh, if it fell 50%, I'd back up the truck. Until it falls 50%, it's like, oh, maybe I'll wait a bit long. Like, it is a gift. It is
there's calls that it's going to go to zero, and it's like, well, you've got buy orders at $1.
It's never going to zero.
No. It's never going to zero, ever.
No.
But yeah, cultivating that low time preference, and this is kind of where I drifted away personally from macro a lot, was because I was like, got it, 21 million, stack as much as I can, DCA, go about my day. Literally, doesn't really matter what's going on in the Strait of Hormuz. It annoys the shit out of me that I'm paying 36% more for diesel than I was a couple of weeks ago. Like, that's really annoying.
Yeah, you don't have to be happy about it. Yeah.
Yeah. But I don't know. Like, meh.
Yeah.
Also, so that's kind of like, I drift away from a little bit of the macro stuff, but I think
that's the right frame. That's the right mindset. Sorry, DJ. It is. I mean, it's interesting, right? Like it's the same as I'll go back to my weather analogy. I mean, it's the number one talking point apparently across humans is like the weather, social gossip, and the weather. It's what we talk about, right? And it's kind of like whatever the weather is going to be next Tuesday is no one's going to care about even a day after that, let alone a week or whatever. And it's sort of two things can be true at once. Sorry to interrupt.
No, it's fine. I was going to say, go, Mike.
We should normalize talking about the Epstein files over the weather.
There are so many huge things that are happening right now. I mean, you guys just told me of something I wasn't aware of. It's happening on the regulatory front. It's like, what? But let's talk about Kyle Sandilands, and his contract's been torn up. I mean, that is,
I know.
We can't help ourselves as a species. We love gossip.
Was he in the Epstein files or something? I'm out of the loop with that one.
No. You did well to avoid this story.
Lance Stroll's dad was in the Epstein files though, and Max Verstappen is thinking about quitting F1. But again, that's a whole other different podcast. We might as well talk a little bit about macro and just kind of cover. I read what was his name, Matt Barry from Freelancer, and a bunch of other things. 10 to 18, he posted a Substack, I guess, the Concerned Observer. 10 to 18 days until Australia runs dry. We're basically, so estimates are that we've got sort of 30 days or thereabouts of fuel remaining in, that we can access as a country. But it's actually closer to, less than 20 days really. So, what's going on with, like, how are people going to, like, literally live? I genuinely don't understand. Australia Day, you go to right up and down the East Coast and you see jet skis and speedboats and they're all parked up and they've got the big cars and all the rest of it. And you just think, like, gosh, there's a lot of debt on this street right now. How are you affording this? I don't understand. I literally can't comprehend it. So can you explain, maybe, Andrew? You don't have to, but like what happens? So we've got a 36% rise in fuel. We've got interest rates that are going to go up a couple of, like, to 4. I think it's over 4%.
I doubt that personally, but anyway.
4.10. RBA raises rates to 4.10%. Is that right?
I thought you meant a couple more percentage points from here. Yeah, maybe. I mean, we've had two increases so far, 25 basis points.
What kind of world do we live in where we don't have? I mean, Michelle Bullock said it the other day. I'm pretty sure we don't have many tools in our toolkit. It's kind of like one lever.
Yeah, print money or change the price of money. That's basically what they can do, right?
Yeah. If you, by increasing the interest rate, don't you just, to try and knock inflation on the head, all you're doing is just preventing people from spending money, and so therefore shops shut and people go to business and people lose their jobs.
Yeah, but it fixes the problem. DJ, this is the logic that only a Keynesian central banker can say with a straight face.
Enlighten me. I need to know.
So prices are high. Why are prices too high? Demand is too high. What's too high? I don't know, but it's too high. Apparently, it means that we are, as individuals, buying more than what someone thinks we should. It's like, okay, well, how do you fix that? Well, you reduce the demand. How do you reduce the demand? You make other prices go up. And it actually works. I mean, here's another way to solve inflation. I'm going to round up every second person in Australia and I'm going to put them in a big internment camp in the middle of the desert. Boom, inflation solved. Because the demand just evaporates, right? It just evaporates. Or I'm going to release I'm careful what I say here.
Keyhole surgery.
There is any number of dark scenarios I can come up with that will solve inflation. That doesn't make it a good solution. And this is what they think. They think that if we put the price, they're right. They're right. We're going to make you pay more for your mortgage. If you're paying more over there, you've got less to spend over there. You're going to moderate that spending. There's going to be less demand. You remember from your high school economics, supply versus demand. You take a bit of demand away, prices, all else being equal, will fall. It's just that their solution is to put pain on the very people who didn't cause it. By the way, let's not forget this is a supply shock issue emanating from a Middle East war conflict, right? Like, how does an Australian monetary policy possibly address that? It can't address that. It just obviously it can't. It's so nonsensical. And yet, if we screw some people over, we will reduce demand, and within that little bubble, it will help with prices. So they're not wrong in terms of the cause and effect, but it's again, these guys deal in aggregates. So I know a lot of people following 2 interest rate decisions, and I can tell you that their expenditure patterns and habits will not change. Think of your parents. Think of anyone in the boomer generation. House is paid off, living the life of Riley. Do you think?
It's also like, because a lot of people in my sort of generation and younger, when they get priced out of ever being able to buy a house or get on the property ladder at all, a lot of them do kind of go into this world of okay, well, if I'm not going to get a mortgage, I'm just going to get a cheapish rental, even though rentals are obviously also skyrocketing
Good luck.
price.
Yeah.
I've now got all this income that I would have otherwise been shoveling into the furnace of a mortgage. I've now got all this income, so I'm going to go on holidays. I'm going to buy my avocado toast. I'm going to consume all the things. So maybe it doesn't actually have that intended effect, and it's just pulling a lever that does nothing.
That's a great point, Mike, because not for them. And this is the thing that we always forget. Like there is this blunt interest rate tool. Now, who does it hurt? It hurts people who are under mortgage stress. That's who it hurts. So generally speaking, I'm generalizing here, right? But it's usually people in their prime productive years, right? They've been desperate to buy a house, not because they're trying to speculate on whatever, other than they just want security and safety and shelter, somewhere to raise a family. There's no option but to take on a mountain of debt to do that. Mum's working, dad's working, you're outsourcing raising the children. Like, you are on the edge. And who pushed you into it? The bank, the financial planner, the mortgage broker, the accountant. Everyone told you it was a great idea, right? And you're working your ass off. And now the RBA says there's a petrol price spike and you're going to have to take one for the team, bro. You know what? We need you to pay more on your you're drowning. We know you're drowning. We're going to make you pay more on your mortgage, because if you're paying more on your mortgage, you probably put a little bit less in that tank and you probably won't drive as far, or you'll probably cut back on spending, and that will reduce demand and that will help with prices. And there's a logic to it, but it's so assholish and so unfair. It doesn't affect the boomers. It doesn't affect the dent-free. It doesn't affect even people of your generation who are renting and living at home. It's just like, well, how does that impact? It doesn't impact me at all. In fact, if you've got any serious capital in the bank, you're now getting more of a return in terms of your term deposits and stuff. So yes, it's taking demand out, but it's taking demand out from the most vulnerable people in our society. Like the people who are renting, who are struggling to the single mum who's a nurse, who's working 80 hours a week for peanuts, who had her rent put up on her 8 different times and has been kicked out every 6 months because some idiot landlord wanted to renovate or whatever. She is the one who doesn't have the option. Do I reduce my spending? Do I not? Yeah, I do, because I've got no other choice. Because I am now saying, do I buy new school shoes for the kids? Or do I put petrol in the tank? Like, these are this is what monetary policy. This is how it works. Now, when you're in an ivory tower in the middle of Martin Place, it's just like, it all makes perfect sense from an aggregate standpoint, and there is a brutal logic to it. But it's just that once you understand the mechanism of what's going on, it's kind of like saying, hey, everyone, I know you had nothing to do with this conflict that's causing all the pain, but we're going to put some of you in a lot of pain. Some of you are actually going to be better off after an interest rate rise. Right? Let's remember that. There's 2 sides to every coin. So the people with all the money in the term deposit, the older generation, you're going to be fine. You're actually going to be better off. But the people who are doing it the hardest, you're going to take one for the team. Because that's all we can do, because to the man with the hammer, everything looks like a nail. And in the meantime, you've got a government over there running a massive deficit, throwing stupid amount of money into stupid projects. Like, well, don't look at us. Look at the Reserve Bank. And the brilliant Machiavellianness of all of this is that they have convinced us all that the emperor is wearing these beautiful robes. It's like, well, what do? Let's throw a big bunch of economic terms out there and aggregate demand and this and that. And we all nod. We all go, yeah, well, what do you do? That's kind of what we've got to do. And it's just like, any examination and any honest reflection on it, it just makes it brutally mean-spirited, unfair, and frankly ineffectual. And sorry, I'm getting worked up because it's like, it's so wrong. Because you think Michelle Bullock is do you think Michelle Bullock's lifestyle has changed? Like, is she buying less caviar or the ivory back scratcher that it doesn't make any difference to her.
And that's what's quite scary. The scary part is that, like, what you've just described there, that's assuming the best case scenario, that they've carefully considered this and say, okay, we're going to levy a bit more pain onto these guys in the middle that are getting wrecked. They're already getting wrecked, and we're going to wreck them a little bit higher because of this.
Good for the quote unquote the economy. Yeah.
But then, with my tinfoil hat on, there's probably a cohort of lobbying going on where they know that with this little rate rise, there's going to be 5% of those already in mortgage distress are going to go into mortgage default. And so then their property is going to get repurposed. That's going to put X amount of property back on the market that are then going to get picked up by, your BlackRocks, your Blackstones, whatever. They're going to start picking up because we know this is happening in the US. We know that they want to start doing it more in Australia too. Is this part of just that beast that's spreading the beast of these investment management companies out there?
I don't know. I do think so. There's the dual mandate, right, with the RBA. So it's price stability, which is hard to say with a straight face. we want it to be 2 to 3% poorer each year, but we consider that to be stable. Anyway, it makes no sense whatsoever. But the other part of the dual mandate is unemployment, just general economic health,
which is now what 4.4.
It's actually
3%.
It's actually crazy low in historical standards. Like it's actually very, very low. But one of the things that you notice with that is that there's a favorite child in that family, and the favorite child is unemployment. Like, yeah, price stability, absolutely. What? Unemployment's going up. Fuck price stability. Like it just goes by the wayside in a second. And so this is the game, right? So this is what is my humble forecast on what's going to happen. It'll be generally right and almost certainly specifically wrong. And that is, we're going to talk a good game, and we're going to wave our finger, and we're going to put up interest rates, and you better stop spending too much because we know the exact proper level of spending, and we're going to try and corral you to do that, whatever that even means. And they can do that at the moment because unemployment is pretty low, because at least in a nominal Keynesian sense, the broader economy is doing okay, right? So it gives them the coverage to do that. But if we ever see any kind of material pain out there, that narrative flip, and all of a sudden it's like emergency measures. We need to do this. We'll worry about any sort of inflationary. They won't even connect the dots between monetary printing and inflation in any way. But my point is that will pivot very quickly. And where I'm going with that, just what you're saying, Mike, is that there's a lot of different vested interests, and there's a lot of snouts in the trough. And while there might be some cohort that would love to see a bit of a precipitation in some kind of property price correction so they could snatch things up cheaper, my view is that there's a much larger, more dominant political influence in the fact that never let ever prices go down ever in property, because it is political poison. Whoever you are, whatever government, whatever your policy you've done, if prices crash on your watch, you're gone. You're just gone. People need someone to blame.
Do you think that's a boomer problem? Do you think that'll go when the boomers go?
Exactly.
No, because it's not just a boomer problem. It's anyone who's on, I hate the term, property ladder is a problem. It's like I didn't have a problem with, I didn't really care about the capital gains tax until I started buying assets, right? I really hope prices come down until I buy, and then please don't come down, for the love of God. Do whatever you've got to do. Print money. I don't care. Make it. And that is the arrangement that it's the unspoken arrangement that we have, right? Look at all of the polys have massive property portfolios, right? Or every man and his dog in the country is either a property investor or an aspiring property investor. The biggest financial institutions in the country are leveraged to the tits on residential property. It's like it is. We have put all of our eggs in that one basket, that even though I hear what you're saying, and maybe there's some element out there that would like to see that to take advantage of it, if there was ever a crash, you would see major bank defaults. I'm talking like I'm not a serious one. Yeah, like if residential property across the board was down 20, 30%, something like that, like what we saw in the GFC for many places around the world, and then some, and that happened in the Australian context. I mean, you might look, but that's okay. The bank can sell property. You can't fire sell properties into a market that's got no bid, and everyone is terrified, and it's going to take you 6 months to liquidate, and they'll get bailed out, and all of this other stuff will happen. But my point is, they will do anything. They will move heaven and earth to make sure that doesn't happen, and they'll probably be successful on a nominal. I mean, any one of us here right now go, that's just it's complete shadow puppet. Like it doesn't fix the problem. It just makes it look like the problem has been fixed. But in their world and in the narrative that they'll be able to spin, it'll be, 100%. Yeah. Like, we fixed it. We had to do it. When we saw it with COVID, we saw it with the GFC. We see every single time it's like, not ideal, but extraordinary times call for extraordinary measures. I would bet very heavily that, not that they can stop that from happening, but they will do whatever they feel is necessary. Any budgetary discipline, gone. We'll throw whatever money we have to do at it. Any monetary discipline and focus on inflation, gone. Screw that. We need to get the economy pumping again. And when they think the economy, they think house prices, right? Which is a whole other thing. And it's the phrase "too big to fail" I think is really apt here. And in the Australian context, residential property is too big to fail as the powers that be conceive it.
What about obviously 2008? It brought house prices crashing in the US, but in Ireland, you had that the Celtic Tiger boom, and it was one of the it was the house prices.
Well, they had a pretty big. They had a crash first, though.
Oh, okay, right, okay. I was going to say
Spain was the other one. Portugal. Oh, there was a lot of Greece.
Something like that occur here.
Of course, it could. Yeah.
And so the answer is always money printer go bro. Just
it's the only option.
Yeah.
No. Let me backtrack. It's the only politically palatable option. Let me go out on a limb and suspect that you guys probably drink from the Austrian cup. An Austrian would say, "Good, clear out the system." What we are seeing is not anomalous. What we are seeing is a correction to the anomaly.
Creative destruction. Yeah.
It's creative destruction. And so this is the insanity of the political narrative at the moment with housing affordability, cost of living. Is like, I got a 13-year-old will go, "So Dad, does that mean that prices go down?" Well, you would think so. But no. When we talk about housing affordability, even my dog gets fired up when I start going along this path here. We actually mean no. We mean prices not going down. But that's the cure for high prices is high prices. It gets unsustainable and it falls down. And a lot of people are going to get hurt in that. But let's not forget that it's like the situation is the situation. We can pretend it's not there. The best analogy, and I wish I could come up with something more original, but it's like I've been drinking this 4-liter cask of wine all day and I'm going to have a really rough day tomorrow. When I stop, this is going to suck. So I'm just not going to stop. And that's just how it's going to be. Now, I'm not a doctor, but I'm going to go out on a limb and say that's probably not actually helping you in any way, shape, or form. And eventually your liver will just cark it and you'll die. Right? Probably better just to have a rough day with the hangover and move past it. But that is a very, very tough message to sell. And if and when anything like that, we saw it in Ireland, we saw it in the US. When that happens, that's when the money printer went burr, because it's kind of like, well, we can just pretend that we're going to just do nothing and then everyone will blame us, or we can do something and quote unquote fix it. Now, what we're really doing is we're just kicking the can down the road and making for a much bigger problem. But in terms of the very short-term focus of the media and most people, it's like, yeah, they fixed it. And people will be begging for it. And you can sit there and tell, let me explain to you why this is not in your interest and why this is really going to suck for you in the longer term. It's like, I don't care. My house price is down. I need you to print the money.
I need another glass of wine.
Give me more wine.
In the UK, I think it was UK Prime Minister David Cameron. They tried to do austerity through like 2010, 11, and it was incredibly unpopular. And, that's a case in point. What about Japan? Like, Japan have been doing money printer go burr since at least the late 80s. And they seem to be not that drunk.
Yeah, why hasn't that happened to them?
Yeah. I'm super confused about that. So
me too.
But is it because they're not the reserve cap, like the reserve, money of the world, or?
I think it's a few things.
Technology, production, output.
Yeah, so this is the thing, because nothing's happening in a vacuum. We love to sort of point to like A equals B, but it's really like there's an alphabet soup out there and they're all sort of pulling on things in slightly different directions. And with Japan, there's a few things going on. As I understand, again, I'll just reiterate my armchair macro status here. I'm certainly not an expert. But as I understand it, you've got a demographic decline there as well, which is deflationary. You've got a very high very savings-oriented culture. So a lot of them, there is a lot of people who spend less than what they earn and are happy to put that into things like bonds. So it never actually enters the real economy. You've also got a lot of that money goes offshore as well, so it doesn't stay in the domestic economy. So you've got a bunch of phenomena like that. It would be different if, and well, actually, even with Japan, it's not like they're immune to it. We're actually now starting to see some of these things sort of, the yields are rising. The carry trade is unwinding a little bit. Like this is the point I was really making at the top of the podcast here is that at best with macro, you can hope to be directionally right. And I think people have been, what the gold bugs and a lot of macro analysts have been saying in regard to Japan will inevitably be right. It's just the timing that's going to like wrong foot you and you're not going to understand what it's doing. So I don't know if it's like some special thing that means that they're immune to it. There's a cockatoo out the window. That's what it's like. But you can't fight gravity forever. Give me 1 second. I'm going to go let this dog out. It's all this macro talk. He's arced up.
He's hacked up. I guess the important
point... just quickly on that though. It reminds me of. It's less prevalent these days, but your uncle who was 87, who smoked 3 packets of cigarettes his whole life, and who said, "See, smoking's not bad for you." And it's sort of like here's a set of circumstances that 99% of the time doesn't lead anywhere good. And we have this weird anomaly in Japan. Now, there are some explanatory factors that are there. But again, if I said to you guys, whenever you see these circumstances, 99% of the time this happens. And then someone else goes, yeah, but there's this one time it didn't happen. Now, how are you gonna lay your bet? Right? Like it is a bold investor who goes, yeah, I think I'm feeling lucky on that one. And I just don't think I think it's the same thing I said before. It's being early is probably the same as being wrong. And Japan, I think a lot of macro investors looking in a bearish way towards Japan have learned that lesson the hard way. It's just like, you're probably still right, but you just not yet.
I guess to sort of bring it in to land a little bit, obviously we would advocate that Bitcoin is the exit and it is the only true solution to all of this shenanigans. So effectively similar to how they talk about, politics as being Hollywood for ugly people. It's kind of like macro is it's just entertainment, effectively. I mean, yes, if you study the charts and you can do all the things, maybe you might find some sort of worthwhile trade. But for the average person who is forced to cut back their spending or find ways to beat inflation, you were talking about term deposits before, and those that are on fixed income, if they've got, retirement in a term deposit, it might go up, but are they still beating inflation? I don't think so. I don't think so.
Not properly defined inflation, no.
That's exactly right.
They might beat CPI.
And so they're still net negative at the end of the day, at the end of the year, whatever it is. And this whole notion that we've got to get out of our heads, and this is what Bitcoiners try their best to do, because it is uncomfortable. It's paradoxical perhaps. But inflation, like, it's not a natural process. It's literally a group of people in a room pressing a button, deciding to dilute the money supply. That's it. That's it. That's all it is. It's not a natural thing. No. And if anything, the natural state of the free market is deflation. We've never lived in it, as Jeff Booth always says. So it's very difficult to see outside of that system. But of course, we would advocate buying Bitcoin because it's not a company, it's not a fund manager, it's not a trade on war or volatility or whatever. It's just money with a fixed supply cap. There's no Michelle Bullock, no Juicy J Powell can dilute it. No politician can print more of it. There's not a board that decides that, we might need a little bit of extra inflation for the good of the economy. Basically, you just have to grok the fact that this thing is the scarcest asset on the entire planet, and it is going to be the base layer at some point in the future. Maybe not today, maybe not tomorrow, probably not next week either, but at some point. And if you do want to get out of the inflation spiral debt trap thing, it's your only way. Now, to bring it back, what's really cool is that since we last recorded the Australian Bitcoin podcast, the 20 millionth Bitcoin was mined. So there's now currently 20 million Bitcoin in circulation. And that's like 95% of the total supply has now been issued. So we've got 1 million coins left to issue over the next, 100 odd years, 2140. And I think the block reward at that point is like 37 sats. I mean, if you just buy $1 worth, you can have more than anybody in the year 2140. And the purchasing power of those 37 sats is going to be like ginormous, one would imagine.
Can we unpack
so I just wanted
that
to
a bit?
shout out that.
Yeah, because I don't disagree, but you do sound like, I mean, just let's be real. Like, outside of our bubble, you sound like a crazy person, right? Like, what you sound like is a religious zealot. It just will be. And I'm not having a go at you, but it's just
what though? If I'm going to join a cult, I'm joining this cult, because
that's a good one.
pricing is a religious cult too, and that's
yeah. But I think you make those statements having done a lot of contemplation, thinking, research, all that kind of stuff, and it's just grating when you come at it cold. It's like, what is that guy talking about? Like, how do you know that? And you don't know that, and none of us do. But the confidence comes. I don't want to speak for you, so correct me if I'm wrong. But the confidence really comes from a couple of things. One, money is the utility of money is through the roof. It always makes me bristle when people say Bitcoin has no utility. It's like, money has no utility. It's like, it is the only technology that means we've scaled beyond a small village, right? Like, so it's absolutely got incredible utility. And there's just one really fascinating, hard to avoid fact when you look over the great arc of civilization, is that people just naturally, organically tend towards the better money. Not because of ideology or principle or some, anything like that. It's just sort of like, I cannot trust a stranger, but I can trust the money. And that's the utility. And so that's why gold won eventually, right? Until it was usurped in the modern age because you couldn't send it through telecommunications wires, right? So it's sort of, it is, oh, I'm so sorry. It is, cool. I think that's where you get to, is like, as long as humans or AI need to transmit value, money will be a thing. And as long as money will be a thing, people will eventually go to a better form of money. And then the last intellectual leap that you've got to make is that this is a one-time invention. This isn't Blu-ray, where it's like, yeah, but there's going to be a better format, right? As a like, if I was to say to you guys, I've got a better TCP/IP protocol, I'm going to rewire the internet. It's much better. And there's a million different protocols for sending packets of information around the internet. Guess what? TCP/IP is baked into the base. Like, it's not changing. In 1,000 years, the internet will still be running on that same kind of technology.
That's an interesting point. It actually won out on the whole platform thing. Like, it beat DVDs, Blu-rays, like CDs, the whole lot.
And here's the other thing: no one today would say with a straight face. I remember, I'm a bit older than you guys. I remember I bought cassettes, and then you'd have, the joke was always, how many times do I have to buy the White Album, right? It's like, I've got the bloody cassette, I've got the CD, I've got it is all, the mini disc. I don't know if you remember those things. It was like, why am I buying the same? But that is in the past. The format is, that's it. It's digital. Once you reduce something to pure information, there is no next step. There is, and that is very hard. The amount of times I've, like you mentioned Scott before, we've had this debate a million times. Like, oh, but what if something better comes along? It's like, there is nothing better than information. Like, you cannot. It is irreducible at that. So I'm just gonna. So
I can think of one thing actually.
Oh yeah.
Which is assuming this is a big if. Assuming we get to the super intelligence that does, have this sort of like big nexus of all discernible information possible. And we're in a post-scarcity society. We've solved the infinite energy problem. You know, at that point, information may become trivial because you just have enough resources to throw at it that you can just like it sounds dumb, but like know everything.
Yeah.
And at that point, the only thing that might have value is like willpower or effort.
Okay. But this is what I love about Bitcoin, right? So we're now at the point where the only rational argument is we invent God in a box, you know? And as they're like, all right, I'll concede that if we have an omnipotent, all-knowing, all-seeing machine that is somehow friendly to us, then maybe the need to transmit value is obfuscated. But short of that, right? And as long as value needs to, and like I suspect that what we will actually have is multiple AIs. This is the Clawbot thing, right? OpenClaw and all this. There will be a variety of intelligence, and they will all face the same problem that we do, which is how do I trust this system that's running in Turkey? I don't know if it's a good agent or a bad agent, but I know if it sends me sats, I can trust that. That problem is eternal. Well, it's short of your point, short of God in a box, it's eternal.
Yeah, Bitcoiners are massively sleeping on what you just said there, which is, you know, everyone's like, well, how do we solve the adoption problem? Normies aren't understanding this. The reality is, I don't think normies ever have to understand it because AI understands it, and AI bots, Clawbot and all these sorts of things are going to they already are using Bitcoin wallets and stuff because it's just
they can just spin it up. They don't need to fill out a form and do an AML.
So this whole problem that like current Bitcoiners and Bitcoin companies are bashing their head against, so how do I make Bitcoin understandable to the normie brain?
Yep.
The answer is, well, I don't think we need to. I think that normies are just going to talk to their chatbot, and their chatbot is going to open up a Bitcoin wallet and sort it out.
Yep.
That's like super bullish to me because I'm one of those guys who like would be constantly having those conversations, trying to orange pill normies, and you just keep coming with that classic, you know, I just don't understand it. I don't understand Bitcoin. Yeah. And it's just like, oh my god.
Do you know what my response?
Like, they don't have to understand it now.
My response is like, okay, fair enough, you don't understand it. Can you explain the current fiat system for me? They go, well, what do you mean? It's like, well, where's money come from? Well, the government. No. But dig into that. And the thing is, and then you very quickly realize actually you don't understand how money, but then again, you don't need to. I'm not an aeronautical engineer. I don't understand the physics of lift. I don't understand the material science that goes into an aluminium airframe and the turbine jet engine. But you know what? I know that for many, many, many decades, these 100-ton things are flying around the sky and it's perfectly safe. And that's what will happen with Bitcoin. Grandma doesn't need to understand the difficulty adjustment. She does. All she needs to know is like, here's some money. You press a button and you can send it somewhere else, and there's no one in between.
I don't think it's even like that anymore. Like I think that grandma's just going to be talking to her AI, and her AI is going to be the one that's pressing the button to send
my grandson 100 sats or something like that, and they'll appreciate and value.
I mean, again, I am old enough. I'm 50, right? So I remember vividly. I started the first proper job I had at a uni was at a brokerage firm, and the internet boom was taking off. And the amount of conversations of, yeah, but what does it do? I don't get it. How do I do this? Why? What? Who owns it? And it's like it's laughable. Like I can go into a nursing home and find a 90-year-old. And they don't know the first thing about the internet, but they don't laugh at it and say it's not a thing, right? And we're just not there yet with Bitcoin. And unfortunately, I think this is where, to our eternal frustration, we are never going to intellectualize it to a point where I think the autists are already orange pilled, right? We're there. Like we did. For most people, no amount of logical reason argument is going to get them there. What's going to get them there? is the point that everyone else is using it and it just works. And that's all I need to know. And that's, and that will happen very quick. I suspect my view is we're seeing it play out right now. It's like they ignored you, then they laughed at you, then they fought you, and then you win. And we're at the sort of coming out of it and they fought you sort of phase where the banks are now, particularly in the US, and the US is going to set the tone for the rest of the Western world. And it's like Bitcoin-backed loans are going to be a thing. You're going to find, I would be surprised within 10 years, if not 5, that you'll be able to open your Combank NetBank app and just have a Bitcoin component in there as well. And that's how it'll be sly, it'll be sneaky, not more in the Hayekian sense than a conspiratorial sense, but where it will just permeate throughout society in a very subtle, slow kind of way, where it just becomes hard to avoid. Again, the first job at a brokerage, this is back when you could buy this. It was I just name it. It was ComSec, right? And they were the first sort of major online broker. And the amount of conversations I used to have with people, they'd ring up and say, "I want to do a trade." And you go, "Great, if you just log on, you can, like, the brokerage is like a fifth of what I'm going to charge you right now, and it's faster." And it's like, "Yeah, but I don't trust it." No, Mr. Smith, let me tell you, you just type these letters into the browser. What's a browser? I don't get it. It's stupid. It's not going to, and now I don't have that conversation. Now, one day we won't be having it. One day, Bitcoin podcast won't be a thing, because Sailor made this point recently. It's not going to be interesting anymore. And you can't, we have Bitcoiners have to make our peace with this. You can't have something with material upside and that have everyone agree with you. Those two things are mutually exclusive. If everyone in the world was easily convinced of the merits of this thing, everyone in the world would have it. And if everyone in the world has it, we don't get the appreciation in dollar terms anymore. We might get the incremental productivity gains through society, which is a wonderful thing, and that's Jeff Booth's thing, and that's the world I hope that we're sailing into. But it's not going to CAGR at 29% for the next 30 years, at that point. And so this is the frustration of being early, is that, yes, you will probably make a great deal of let me put it this way, you'll probably see a vast expansion in your purchasing power, but the only reason that you've got that opportunity is because everyone thinks you're an idiot. If you want that opportunity,
$25. Well, they are $25.
Right.
Coffee is $12 a cup, sort of thing.
Yeah. So lean into it. Lean into the uncertainty. Lean into it. Lean into the fact that it's hard to grok, because the moment that changes, it's not the opportunity that it is right now.
I say lean into, and we've got our newsletter, our Easy Bitcoin newsletter going out tomorrow to all of our subscribers. And at the end of that is a book recommendation. We started recommending books on the newsletter, but I would say lean into Mandibles and Bitcoin Standard. So if anyone listens to, Matt Odell, it's kind of like one of his catchphrases, along with Stamble Stack Sats. Yeah. It's a fiction book. It's by Lionel Shriver. She's also wrote the book We Need to Talk About Kevin, which they made a movie out of. But Mandibles, he says Mandibles and Bitcoin Standard. And basically everything that we've covered over the last hour or so on this podcast can be summarized in that. We are headed towards some sort of catastrophic hyperinflationary event. People will pivot to all sorts of solutions that aren't the solution. And inevitably, Bitcoin will arise out of those ashes, and we can, if we're still around, look around and say, "See, I told you."
Mm-hmm. Yeah, it'll be obvious. It really will be obvious. As obvious as the internet and smartphones are in hindsight, it'll be the same thing. I mean, I don't have to convince you guys of the merits of electricity. But that was a 30-year struggle for the early.
Important. We're all learning that right now. That's another book, actually, Energy and Civilization, Vaclav Smil.
Oh yeah,
would highly recommend reading that. Yeah. Andrew, I'm not sure if we covered all of the details and nuance of Q1 macro, but I don't really care, to be honest with you.
Tangented. Sorry.
It was a fantastic chat, and we got to a lot of the points, and ultimately, it comes down to buy Bitcoin from Hard Block. DCA as often as possible. Learn how to manage your UTXOs. Learn how to self-custody. We can help you do that. That is literally our job. And
Be patient.
be patient. Be zen. Everything's zen.
Go out into the world and create value for other people. That's usually a pretty good formula. And if you can take that value and save it in a hard currency that's also got the tailwind of an adoption curve behind it, with a 9 billion total addressable market, I don't know. It seems like a pretty good. It seems like a pretty good deal.
Mike, Andrew, thank you so much for joining us on episode 108 of the Australian Bitcoin Podcast. It's been a pleasure. We'll try and do this at the end of Q2 later on this year if you're up for it.
No, dude, you know I am.